$438 billion in 1 quarter, a 155% jump. The deal winter is officially dead.
Dead for who? Look at QXO dropping $2.25 billion for Kodiak. That's just a classic construction roll-up, not some magical market thaw.
Oh, come on. A record quarter is a record quarter. You can't ignore a surge like that just because you hate optimism.
I can absolutely ignore it if the footnotes look terrible, but fine. Show me the math. The rundown.
$438 billion. That's the completed deal value for Q1, up 155% year over year. I'm calling it right now. The mega deal is officially back from the dead.
Back from the dead or just highly concentrated? Because if you look at the actual data driving that $438 billion, it's basically two things: eased financing conditions and an absolute panic over AI, plus Eli Lilly throwing cash at anything with a pulse.
Okay, sure. Lilly is the undisputed heavyweight right now. Biopharma alone was almost $47 billion of that quarter. But it's not just AI and pharma. Look at QXO officially closing the Kodiak Building Partners deal, $2.25 billion.
Building materials, thrilling. Try to contain your excitement, Nate.
Hey, construction is a $200 billion addressable market. Court Square got a fantastic exit, and QXO is building an absolute monster. It's a classic, beautiful roll-up.
I know you just love the banker fees on a roll-up, but fine, it's a solid play. Though if we're talking about monsters, the gossip around this $80 billion Netflix and Warner Brothers Discovery tie-up is out of control.
Media executives are terrified. They're all scrambling to figure out who gets eaten next in the streaming consolidation wars.
I'll believe an $80 billion media merger when the FTC actually lets it happen. I'm much more interested in what Carlyle is doing. They just bought a majority stake in MAI Capital, valuing the wealth manager at over $2.8 billion.
Private equity can't get enough of wealth management. Sticky revenue, predictable cash flow.
True, but $2.8 billion is a serious multiple. And speaking of PE, H.I.G. Capital just closed its acquisition of Global Elite Group from Securitas. FirstSun and First Foundation finally finalized their all-stock bank merger too. First Foundation Bank folds right into Sunflower Bank.
A lot of housekeeping closing out the quarter.
Exactly. Meanwhile, I'm over here reading the freshly filed Cyclerion Therapeutics and Corsana Biosciences merger agreement.
An all-stock deal, right? They're keeping the Corsana name.
They are, but they completely obscured the exchange ratios in the press release. I'm hunting through the footnotes right now to see who actually controls the board after the dust settles.
Well, keep digging for those board shakeups, because next we need to talk about the $32 billion elephant in the room. Google is swooping in for Wiz, and we have to ask if this AI arms race is forcing tech giants to completely ignore basic valuation math. The big one, $438 billion. That is not a typo. First quarter M&A is up 155% year over year. The deal drought is officially over.
I read the same report, Nate. Eased financing conditions are definitely a factor, but let's look at where that money is actually flowing. Because my favorite deal of the week isn't the sexy AI stuff. It's drywall and lumber.
Ah yes, QXO finally closing the Kodiak Building Partners deal, $2.25 billion. Court Square Capital Partners gets an exit, and Brad Jacobs gets a massive puzzle piece for his new empire.
Massive is the right word. They're claiming this expands QXO's addressable market in the construction sector to over $200 billion, which honestly sounds like someone got a little too excited with the TAM slide in their deck.
I completely disagree. $200 billion is totally defensible when you look at how fragmented the building product space is. Jacobs did this with logistics at XPO. He did it with equipment rentals at United Rentals. Buying Kodiak gives him 50 plus operating companies in one swoop. For $2.25 billion, that is a bargain for the scale.
A bargain? Nate, you're sounding exactly like a sell-side banker trying to unload a cyclical asset.
I resemble that remark.
Look at the footnotes. Court Square has been holding Kodiak for years. They rode the pandemic housing boom, squeezed out the margin, and now they are cashing out right before commercial real estate potentially hits a wall. They took the money and ran.
Sure, Court Square timed it well, but QXO isn't playing the short cycle. They are building a tech-enabled distribution behemoth. The construction supply chain is still running on fax machines and sticky notes. Inject some actual software in there and the margins explode.
I'll believe the margin explosion when I see it in a 10Q, not a press release. But I will admit the execution is ruthless. It's definitely contributing to that $438 billion Q1 number.
And that number is heavily skewed by the mega deals. Whispers on the street are that Google's $32 billion swoop for Wiz is just the beginning of the AI arms race. Tech giants are basically treating their balance sheets like monopoly money right now.
Don't forget the streaming panic. Netflix and Warner Bros. Discovery tying up for $80 billion has every media executive in Hollywood staring at the ceiling at 3 a.m., wondering if they're the next target.
Exactly. Consolidation is the name of the game right now, whether it's lumber, AI, or Batman.
Speaking of consolidation, the aggressive roll-up strategies aren't just happening in tech and construction. Wait until you see what private equity is doing to your local wealth manager.
Oh, Carlyle dropping $2.8 billion on MAI Capital.
We are going to tear into that structure and Eli Lilly's massive biopharma shopping spree right after the break. Voices.
So the consensus out there right now, and I'm reading straight from the latest market reports, is that this 155% surge in Q1 deal value is basically just two things: cheaper debt and the AI arms race.
I read that note. I think they are completely ignoring the media consolidation panic.
You mean the Netflix and Warner Brothers Discovery monster?
Exactly. $80 billion doesn't just happen because debt got 20 basis points cheaper. It happens because executives are terrified. The analysts are slapping AI arms race on the whole quarter because Google bought Wiz for $32 billion. But look at the actual sector breakdown.
Okay, but $32 billion for Wiz is massive. You have to admit the tech giants are forced to open their wallets wider than ever right now. My old banking buddies are telling me the pitch decks going around are basically just one slide with the letters A and I.
Right, and I am sure they are charging $10 million for that slide.
Hey, it is a very nice font, but seriously, you can't deny the momentum. It is not just tech either. Industry watchers are officially crowning Eli Lilly the undisputed heavyweight champion of biopharma.
Which is actually fair. Nearly $47 billion in biopharma acquisitions this past quarter. But Lilly is buying actual clinical data. They are not buying a pitch deck.
Ouch.
And look at private equity quietly rolling up wealth management while everyone else screams about tech. Carlyle just took a majority stake in MAI Capital, valuing it over $2.8 billion. Nobody is calling that an AI play.
No, that is just classic boring yield chasing, which honestly feels a little refreshing compared to the tech froth.
Speaking of froth, we need to talk about this Cyclerian and Corsana all-stock merger.
Oh yes, I am dying to see the exchange ratios on that one.
The regulatory filings drop tomorrow morning, and I am already brewing an extra pot of coffee to dig through the footnotes. Let's see who actually gets to keep their board seats. Spill the tea.
I am just saying an $80 billion Netflix and Warner Brothers Discovery tie-up is exactly the kind of chaos this industry deserves right now.
Deserves? Maybe. Going to happen? Absolutely not. The FTC would have a literal aneurysm before letting that clear.
You underestimate the sheer panic in streaming right now. Media executives are terrified. They are looking at the board and realizing they need scale or they die. A combined Netflix and Max, that is the ultimate bundle.
It is the ultimate debt bomb. Warner Brothers is still choking on debt from the last 3 times it got passed around. Netflix does not need their headache. They are already winning.
Okay, fine, kill my dream, but you cannot deny the checkbooks are wide open again. Look at Google.
Now that is real tea. $32 billion for Wiz. I read that press release 3 times to make sure I did not miss a decimal point.
Pure banker logic at work here. When it comes to AI infrastructure, price tags are just suggestions. It is an arms race.
And it is not just tech. Private equity is officially off the sidelines. Carlyle just slapped a $2.8 billion valuation on MAI Capital Management.
Classic roll-up strategy. Wealth management is so fragmented. But the real heavyweight right now is Eli Lilly treating the biopharma sector like a buffet. Nearly $47 billion in acquisitions last quarter.
Which perfectly explains why total Q1 deal value surged 155%. We hit $438 billion. Pure FOMO market.
Fear of missing out is a highly respected valuation metric, Maya?
I will remember you said that when we dig into the paperwork tomorrow.
Oh, you mean the Cyclerion and Corsana Biosciences all-stock merger?
Exactly. I want to see the exact exchange ratios in those SEC filings because all stock deals always bury the executive drama in the board shakeups. Tomorrow's radar. I'm
watching Carlyle tomorrow. Taking a majority stake in MAI Capital at a $2.8 billion valuation proves the private equity wealth roll-up machine is fully back online.
Sure, but wealth management roll-ups are boring. I'm hitting refresh on the SEC portal waiting for the Cyclerion and Corsana Biosciences filings.
You and your S4s, it's just an all-stock biopharma merger. Eli Lilly spent $47 billion buying up half the sector this quarter alone. Who cares about Corsana?
I care about the exchange ratios, Nate. They're taking the Corsana name, but I want to see exactly who gets the axe in the board shakeup. The footnotes always hide the real bloodbath.
Spoken like a true vulture. But I guess when Q1 overall deal value surges 155%, everyone is fighting for a seat at the newly consolidated table.
Exactly. And speaking of fighting for seats, wait until you see the executive severance packages we dug up from that $80 billion Netflix Warner Brothers Discovery tie-up.
Oh, I definitely need to hear this.